transplant other things.
Good afternoon, and thank you for joining us. My name is Alex Ross, healthcare analyst here at Hedgeye Risk Management, and today I'm joined by Tom Tobin and Emily Evans for this edition of Sector Spotlight. At the end of the call, we'll have an anonymous question and answer session, so please put your questions at the bottom of your screen in the QA box, and we'll get to as many as we can at the end of the call. And with that, I'll turn things off to Tom.
All right, thanks a lot, Alex, and thanks, Emily, who's going to be on the phone and sort of making some commentary or what she's seeing on the policy element, which is clearly dominating our space beyond the fundamentals here, which have been mixed to worse, I would say, on average through the quarter. If you flip to the, we presented our Q2 themes for healthcare last week. I pulled out some of the more interesting slides as it relates to what we're hearing about in earnings season, in particular what we're looking for on the over-under. So on the major themes, you'll notice that we've seen maternity continue to weaken, which is a big deal for providers, particularly for U.S. medical costs, insurers included. We saw some weakness, although not directly. You can paint the picture from LabCorp today on their Covance result that the biodollars clinical trial activity looks like it's softening in line with the slowing medical economy growth. The insured medical consumer has been a theme. We'll cover that really quickly. And then some of the policy stuff there at the bottom, repeal, replace, all coming back into focus this week and into tax reform in the coming weeks, into funding the government and the continuing, this week, et cetera, et cetera. On our position monitor for the fundamental side, we got the negative pre-announcement out of HCA, a negative pre-announcement out of Mednax. Both names were short. On the bench side, we're not actively short, but we've been scanning this. Actually, LabCorp and Quest had very good volume numbers this week. There's a couple of things I just tweeted on the chart there on our at Hedgeye Healthcare or HC feed that look like they're overlaying nicely with acceleration, which would be counter to one of our major themes, but I'm not sure what's going on with lab. And then on the policy position monitor, we'll get into this when I flip it over to Emily to talk, but she's basically got from the policy point of view what the over-under is on some of these different segments where we've got ticker overlap. We're hoping to push some through. On just the couple of quick hits here on the S&P 500 versus the XLV, this has been a sort of a constant refrain as the Affordable Care Act is waning, the insured medical consumer has slowed. And through 3Q, I was feeling pretty good. We were doing a really good job sort of betting hard on the short side, and the fundamentals were clearly deteriorating. It proved out essentially on the earnings report, again, feeling pretty confident. But that circle is where the election happened, and you get this sort of flip up on the next slide. And I sort of went through, and our team went through, even though Keith and the macro team was flagging the positive on the market, et cetera, I couldn't get ahead of the fundamental side of the story versus the valuation side, which for a fundamental guy is often the last most difficult mile to cross. And then when we look at the absolute performance versus relative performance on the next slide here, so again, through that third quarter period, we had a tremendous amount of underperformance, close to 800 basis points or more. Then following the election, we played a little bit of catch up. It's still underperformed on a relative basis. And then if we look at it continuously from Jan 1 of last year through this year, yeah, we're up 2%. It feels a lot worse than that chart suggests. But so in some regard, we're sort of doubling down on some of our shorts in the near term. Some of the healthcare IT names, again, it all depends on how the multiple goes, how some of this policy stuff shakes out. Again, Emily will talk about that. And key to our thesis here is this insured population chart. Again, thinking about insured medical consumers being the driver of medical consumption. It's fairly obvious, but this is kind of a tough chart to build. And we found a lot of overlay with things like what people are willing to pay, at least until the election time frame. On the next slide, where you can see sort of this multiple scream higher, but at the same time, look at that EBITDA growth on the next chart. It's not super well justified here that your provider set within the U.S. medical economy is sort of following this insured medical consumer trend really tightly. 0.88 is very tight in terms of correlation, and it looks like we should expect that to continue. So I guess on our point of view, yeah, we missed the rally, but from here, we're definitely scanning for longs. There are plenty of bombed out names filling up our screening bucket at this point. We've probably got 5 or 6 names we're really keyed in on. But again, on the short side, doubling down on some of the work, making sure that we're not totally out to lunch in some of these short calls. and continue to work on that. One of the things I do want to point out, again, this might be one of our themes that were kind of fresh and new and interesting, is this healthcare employment series that we uncovered. So job openings had been, if you flip to slide 12, the job openings, or the number of healthcare openings that are out there, have been up and to the right since Obamacare started. And right now it's sitting at over close to 2.5 standard deviations above its long-term norm. So normally you have about 4% unemployment, people in and out of jobs over time. What we've got right now is close to like 7% plus. And what that's done, though, is there's not a lot of slack demand. So on slide 13, you'll see we did, I think, a very reasonable job using the current population to look at women in the healthcare workforce, which is close to 92% of all women in the healthcare workforce, or 90% of all women in the nurse workforce. In the nurse workforce are women, and they hold an academic associate's or bachelor's degree. We can identify or measure that's only about 30 basis points, which is basically zero slack labor, which means that you're going to see weekly earnings rise, which we are, up 5.4% year over year, and we're seeing this hourly rate essentially up about 10% since late 15. So that's going to be a massive negative for a lot of providers who, like hospitals, have 34% of their costs are in labor. Any kind of facility, we've already heard about it from the behavioral side, UHS and others, but this could be a real structural problem where volume is slowing and labor costs are rising. That's going to back up on the supply costs, which is going to back up on the Zimmers and the BDX and the BARDs and sort of these consolidating behemoths that's still, in the context of the larger economy, pretty small. So I'd flip back to that policy position monitor and just let Emily touch on a few of the key policy pieces going on right now.
Yeah, as Tom mentioned, the real driver in healthcare right now is the policy issues, particularly repeal of the Affordable Care Act. The bill, a repeal bill, was withdrawn at the end of March and is now back live, and we're looking for a vote from the House of Representatives in probably mid-May. That would be my best guess. For all practical purposes, though, the repeal legislation isn't going to be much different than the trajectory that we were already on. And that trajectory is that the Medicaid enrollments will decline because of changes in policy, that the insured medical consumers will decline as deductibles go up. And the individual market continues to be in difficult straits due to inaction by Congress. And then the other part of it is Medicare, which had really became a bit of a political football early in the Trump administration, is kind of off limits. So essentially, policy is sending us towards low-cost providers like ambulatory surgery centers, home health, and also to providers of services that are inclined towards Medicare, dominated by Medicare dollars, like inpatient rehab facilities. So that's kind of the policy, framework as far as some of the stocks, some of the sectors go. The drug pricing issue continues to bubble in the background as well. Although I don't anticipate anything in terms of action until early next year at the earliest, given everything else that is a priority, like tax reform and repeal of the Affordable Care Act and trade issues. So I think that you're going to continue to hear a lot of talk about drug prices and what to do about drug prices, but not so much in the way of action in Congress. And meanwhile, a lot of what can be accomplished through the repeal of the Affordable Care Act can still be accomplished through regulatory means, and is probably going to be accomplished through regulatory means. We now have 5 states asking to change their Medicaid program to have a work requirement. Work requirements tend to depress enrollment, just to give you one example. So it's a pretty exciting time, and it'll continue to change, I think, over over the next few months. And so let me throw it back to Tom and Alex, I guess, for questions.
All right, great. So we're going to do our question and answer session now. To get started, we're going to do a rapid fire session here. So Tom and Emily, some quick questions, quick answers.
Like yes, no?
Mostly yes and no, yeah.
Okay.
But,
And you're going to direct it at either of us?
I'm going to start with you first, and then I'm going to head over to Emily.
Okay, go ahead.
All right. What's your favorite short?
I guess all scripts.
What's your favorite long?
Athena.
Would you short HCA here?
Yes.
Has the Trump rally peaked?
No idea.
Are you bullish on earnings season for healthcare overall?
No.
Would you short CERN on strength?
We have been.
What was the best call of your career to date?
A bankruptcy.
Who has the best management team?
We don't talk to enough of them to know.
Okay, so next question is who has the worst?
Yeah, I don't know.
All right.
Equal opportunity on that one.
And then we'll head over to Emily. Emily,
Yep.
what's your favorite behavioral health name? Acadia, AAC, or UHS?
I'm going to say UHS.
All right. Is there still pressure to act on ACA?
Oh, yeah. There is definitely pressure to act.
Do you believe Republicans will agree to a one-year appropriation of CSR payments?
Yesterday, the answer to that was yes. Today, the answer to that is maybe.
All right. Does a health care bill get passed by July?
I think so, yes.
What's the best health policy bill you've ever seen passed?
The best healthcare policy bill, I would say, was the Omnibus bill at the end of 15, which included site-neutral payments for hospitals and outpatient facilities.
All right, great. And can taxes go to 15% without spending offsets?
Yes, it can. It can happen.
Okay. Now we're going to head to our full Q&A here. Got some questions. First here, your thoughts on Express Scripts?
Yeah, so it's been interesting. We got a lot of questions on the road on that one lately. It's been Emily, Andrew, and I meeting with a lot of people all over, San Francisco, Dallas, Boston, New York, and one of the things that's come up from a policy perspective is drug pricing, and it's been Emily's great point that pharma knows what it's doing, and Express is essentially going to get tossed under the bus. I'd say from a fundamental perspective, I'm less interested in essentially a deflationary environment, which is what I think we're heading in, and buying into a fully consolidated business, because now at the this to me is emblematic of Anthem firing them for essentially cheating them. Or claiming that they're cheating them is all about fighting over the marginal dollar and who has leverage. And Anthem thinks they have it, so they're firing them, and let's see what they can do in the next couple of years. But Emily, if you want to touch on that policy piece, it doesn't feel like Express is along here from a policy perspective.
No, I would say all the pharmacy benefit managers are going to have a tough time here from a policy perspective. As you pointed out, pharma, they really do know what they're doing, and their position is we're not the problem. It's these middlemen, the wholesalers and the PBMs and so forth. And that message is hitting home. So I think it's going to be a pretty rough ride for them, policy and regulatory wise, for the next 12, 18 months.
Okay, great. And moving on to our next question. What are your thoughts on LH, LabCorp?
Yeah, I mean, the organic growth rate re-acceleration on a 1 and a 2 year basis this quarter, both for, I just was updating the Quest, but for LabCorp in particular, was surprising, given the day shift, maybe not so much weather. I got to get into it a little bit more, but what they said around the margin is excusable on the Covance side. So the two pieces here in a healthcare slowing environment is spending less on R&D, being more cautious with capital. That's going to touch the Covance business where they do contract research for pharma and biotech, and we're already seeing the evidence that capital raising is slowing. At the same time, the ACA taper, or the slowing of the insured medical consumer and all the costs shifting towards the individual, particularly in the commercial side of the business, is going to be the thing that I would have thought would have been having more of a material effect in Q1 for their lab business. They make a lot of acquisitions. The policy piece, I think, is going to be generally positive for them under the new PAMA regulation. So maybe there's a little bit of stuff that we don't quite understand from an organic series. But so we've got it on the short bench, both names, and LabCorp would be my pick there if I had to dig in on a name on the short side. But at this point, we're not ready to make that move yet. Devote time.
Okay. And then next question is on our maternity tracker. Or is maternity still declining? And
Yeah, I mean, maybe not shockingly enough, but one of the states that really stuck out this last run was Virginia. Is really falling off a cliff, and maybe that's something to do with how the administration's turnover or transition. But Texas is still weak. Florida is weakening rapidly. Those are two big states for places like Mednex, HCA, Tenet, and that's a big piece of their overall inpatient volume and a big driver of neonatology volume. But yeah, it's still negative. I don't quite understand why. You and I are gonna do some of this work as we pull together a Mednex deck for the next couple days. But rates are down and over an extended period of time. So I think it's more or less, you can model it out here from this point and not really expect. The economy's been up and down already. We're at 4% unemployment. There's no change. So it's getting worse, not better.
Okay, great. And then a question here on Exact Sciences. Are we still long Exact Sciences? Yes, we are. We're long into their print on Thursday. Our numbers are above consensus, and one thing we just flagged was that they announced that their guidance doesn't include their guidance factors in a flat order rate for tests per doc, and recently they announced that they're going to drive to move that rate 10 to 20% higher over the next year.
Yeah,
so.
And also that physician you spoke to today, just talking about these first patients in are now coming back for the second time in that 3-year window. So I think you'll have sort of a stacking effect on the same doc basis. Like new patients plus the returning should get that rate to move higher.
Yeah. Okay, and question here, what are we missing on HCA? Your thoughts?
Corporate tax rate at 15%. I haven't necessarily modeled that essentially because it's a highly indebted, high fixed cost story that I'm pretty confident that they're going to do 8.1 billion versus 8.4 at the low end. Margins are going to go down here for at least through next year on the EBITDA margin basis, and I'm just not sure how to incorporate a tax rate unless it's going to come through a special dividend or buybacks, which are already baked in. So maybe they can accelerate CapEx beyond what they're already doing. These are not necessarily free cash flow stories, and they never have been, and they're not PE stories. So what do I do with a lower corporate tax rate? I suppose buy back a lot of stock, spend more money on CapEx, but they're already taking CapEx up by $300-400 million this year. They'll probably have to continue to overinvest relative to their peers for some times because they've underinvested, in my view, for some years. I think it's a relative multiple game. I think it's the tax rate. I think it's health reform failing. But as Emily said, the health reform piece can be done administratively. There's not a lot. When I think through all the points of why I should be frightened as a short seller or being short HCA, I don't come away very afraid.
Okay, and then Emily, on this one, can you comment on the PBMs and CVS specifically?
I haven't done much work on CVS specifically, but I can talk about the PBMs. And basically the policy issue is this. It is becoming increasingly the case that policymakers see PBMs as maybe part of the problem in the drug price escalation issue that they're so focused on. TRICARE, which is the Department of Defense's health insurer system, they've actually done a report saying PBMs cost them hundreds of millions of dollars. So if that's happening at the Department of Defense, which can create a formulary like no other in government, they're not constrained by a lot of the laws that constrain Medicare and commercial pay. But that's the conclusion they've reached. And increasingly, you're seeing that be the case, that conclusion be the case for other areas. Medicare took the unusual step a few months ago of actually disclosing information about DIR fees, direct and indirect reimbursement, which are related to the 5-star ratings and the performance of pharmacists. So we're starting to see at least questions being raised as to whether or not PBMs really deliver value. You're also seeing employers go to transparent PBMs where they have to disclose every aspect of the transactions and the rebates and what have you. So I think that this story will continue to unfold and we'll see how it plays out. But I think it's going to be it's a pretty high risk area from my perspective in the policy arena.
Okay, great. And then another one here for you. What are your thoughts on drug pricing, and do you think Washington will touch it?
Yeah, they have to touch it. It is an issue that it's a problem, and it's hitting home with constituents who, a few years ago had a $500 deductible or even a $250 deductible, and now have a $5,000 deductible. Meanwhile, the drug companies have raised prices. And they have done it with a certain tone deafness and a lack of understanding of exactly where their consumers were with respect to health insurance. And those forces are colliding, all over the country. But as I pointed out, pharma is a really, really good lobby. And it isn't just because they spread a lot of money around to different races. It's because they are very, very careful about their issue. They don't get involved in things they shouldn't get involved in. For example, the Affordable Care Act, they cut their deal and they got out of the way. They weren't part of, and they don't have a lot of the hangover from that as a result. So they've positioned themselves well to preserve any intervention on pricing in Medicare, any advancement on pricing in Medicaid, any other controls like that. Where I think they might get dinged, if you will, is on transparency, more and greater reporting of what stuff costs and whose hands are in the big drug inflation pie. I think that's the most likely place. There also might be some accelerated generic approvals that would bring more competition to the market, and preventing these little tweaks to patents that aren't meaningful and that allow for patent protection to be extended. But for the big stuff like price controls, no, I don't see that as something that's going to happen.
Okay, thanks, Emily. And we have one more question here for Tom. Is your labor shortage thesis for AMN?
In part, yeah, we covered AMN. We've been short that for a while in the slowdown, but I can't play that if pricing is going to skyrocket, even though volume might be slow. And whatever the JOLTS chart is up and to the right, that's very good for AMN, and it would be thesis drift for us to sit here and say that we should be remaining short into the quarter. That would be dumb. What might be even dumber is not to get long into the quarter. And I just don't know if we're going to turn that corner. I don't know if we're going to have time, but it seems like a fairly obvious second derivative. Whereas if you're looking at wage inflation hitting a provider with 34% SG&A to revenue, that's 100 basis points is a huge chunk of their EBITDA. That's HCA, LifePoint, Tenet, Mednax, who complained about it very specifically.
Okay. All right, well, thank you everyone for joining us, and we'll catch you here next week for a new edition of Sector Spotlight, excuse me.